The stock market just had its worst single day since the COVID crash of 2020. On April 3rd, the S&P 500 dropped nearly 5% in a single session. That wiped out trillions of dollars of value in one afternoon. And a lot of people are asking, is this it? Is a recession actually coming? Let me give you the real picture. What just happened, why it happened, and what the data says you should actually do right now. Here's the situation. Going into 2026, most investors were optimistic. The S&P 500 gained more than 16% in 2025. People expected more of the same this year. Instead, the market has been getting hit from multiple directions at once. First, tariffs. The Trump administration has been rolling out aggressive new trade tariffs. Tariffs raise costs for businesses, squeeze profit margins, and slow economic growth. The market hates uncertainty, and tariffs create a lot of it. Second, the Iran conflict. The war in Iran has sent oil prices higher. Higher oil means higher inflation, which means the Federal Reserve has to keep interest rates elevated longer than expected. High rates slow the economy and compress stock valuations. Third, the tech sell-off. AI stocks, which drove a huge amount of the market gains in 2024 and 2025, have been getting hammered. When the leaders fall, the whole market follows. Put these three things together, and you get the worst quarter for the S&P 500 in years, down 4.6% in the first 3 months of 2026. And then, April 3rd happened, and it got even worse in a single day. So, is a recession coming? Here's what the data actually says. Since 2000, there have been 7 times the S&P 500 declined by more than 4% in the first quarter of a year. Of those previous 6 times, only twice did the market go on to do even worse over the next 9 months. Once was the Great Recession. Once was the 2022 inflation crash. The other 4 times, the market recovered and finished the year higher. In other words, a bad start to the year does not predict a crash. More often than not, it's a buying opportunity. Look back just 1 year. In the first quarter of 2025, tariff fears sent the S&P down 4.6%. Same number, almost identical situation. The market then rallied 22% over the next 9 months. The people who panicked and sold at the bottom missed out on all of it. That doesn't mean this time is definitely the same. Recession odds are the highest they've been in years. The Iran situation is real. Inflation is still not fully under control. These are genuine risks. But here's what experienced investors do when the market drops 5% in a day. They check their fundamentals, not their portfolio. Is the economy still growing? Are companies still profitable? Are you invested in businesses that will still exist in 10 years? If the answer is yes, a 5% drop is just noise. The worst thing you can do right now is make an emotional decision based on one bad week. The best investors in history made their biggest returns by buying when everyone else was panicking. The market is down, the news is scary. And historically, that's exactly when the best opportunities appear.